Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis on the Bitcoin chart after the weekly candle for Bitcoin just closed a few hours ago. And while it was kind of a bullish candle, it closed in bearish territory. So let's get right to the charts. And of course, we will start over here on the weekly candles for Bitcoin. And as I mentioned, last week's candle just closed a few hours ago, and it actually closed below the EMA ribbons. And what the bulls were really looking for was this to close back up in the weekly ribbons. It wicked up in there. However, it did close below these ribbons, and thus perhaps confirming the bearish signal given off by the previous weekly candle that sold off out of the ribbons and closed well below the EMA ribbons for the weekly candles. And if we look back and check our 6, what we were really looking for is a similar pattern that we saw after the May dump for Bitcoin, and the only time we actually closed below the ribbons was on this candle over here. But on the flip side, the very next candle pushed up into the ribbons, and then you can see that started a bit of a bull run. And so that type of price action is what we were looking for out of last week's candle. It sold off a little lower, much like this candle with the wick towards the downside. Last week's candle started kind of the same way. It actually had a wick towards the downside, and then the bulls started to push this price back up into the EMAs. However, towards the end of the week, the bulls failed to follow through and get this price closed back up into the EMA ribbons. And now the new weekly candle is starting the week off selling off. And so now one of the things I will be keeping an eye on is if this ribbon flips upside down, where we get all these shorter EMAs on the bottom and these longer EMAs on the top, then we could actually be headed into an even longer bear market. And so for a perfect example of that, if we jump over here to the daily charts, you can see that the EMA ribbon has actually flipped. The short EMAs, moving averages, are now on the bottom, and the longer EMAs, or moving averages, are on top of the ribbon. So it will take a lot more work for the bulls to flip this and have any hopes of an extended bull run. Now, with that being said, if we check our 6 and look back to the May sell-off on Bitcoin, you can see where the EMAs flip, but eventually the bulls do get back control and then once again flip the EMA ribbon into a bullish pattern rather than the bearish pattern. And in reality, there are a lot of similarities right now on the sell-off last summer to the current sell-off that we're seeing. We saw the big dip down, a bounce into the EMA ribbons, and right now we have that big dip down to 42,000, a bounce into the ribbons, which eventually sells off into a lower low. And if we look back, we reject out of the ribbons and sell off to a lower low of 28.8 versus 30,000. And so again, the current rejection out of the EMA ribbons, we sold off to 39.6, which happens to be support back in this area on this sell-off. And so at the end of the day, we might see similar price action once again, where the market in the summer of 2021 just kind of moved sideways and rejected out of the ribbons before eventually springing back above. We could see perhaps several more weeks of sideways movement, and then perhaps a spring back up towards the top side. However, on the flip side, if the price breaks down below 39.6, then the bears could continue to push that price back down towards 30,000 or that 28.8 level that we saw last summer. And so if I drop in the support and resistance zones, you can see right now that we're looking at pretty much the 41,000 to 39,000 is the support level that needs to hold, or else we're looking back down towards, again, 33,000 to perhaps 31,000. I would actually even extend that down to the 28,000 level. And so with those two levels of support, on the flip side, the bulls will be looking at that resistance back up here around 51,000 up to around the 52.5, or I would say even let's just call it 53,000 level. After that, then we're looking up at around 59 to say 61,000, and then of course the all-time highs will present more resistance up there. So with that all being said, now the weekly along with the daily time frames are turning bearish, and so the bulls will have their work cut out for them if they hope to extend this current bull market. And in reality, at the end of the day, the bears appear to be taking full control of this battlefield. So I will keep you all updated if we see a breach of support, or perhaps we see a move towards the upside. I will do another video for tactical analysis. So now would be a good time to shoot that subscribe button if you don't want to miss out on future videos. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.